I'm Dylan Marma, and you're listening to Operators and Allocators, a podcast dedicated to exploring how to make smart investment decisions and execute well in real estate and private equity. We'll be interviewing top-notch sponsors from various asset classes to understand how they think and the frameworks that they put in place with the goal of achieving above-average risk-adjusted returns. Welcome back, everyone, to another episode of Operators and Allocators. This is your host, Dylan Marma, and today we are joined by a guest who I have the pleasure of connecting with for the very first time, Mr. James Knull. James has a lot of experience in multiple facets of real estate. He has especially invested a lot in Western Canada, and he's also been effective not only as an investor, but also as a business operator. And he's grown a leading team of real estate brokers throughout Western Canada that have been able to build a very profitable, fast-growing business. And I'm really excited to learn both how he's been able to successfully scale his brokerage business, how he's making investment decisions, especially interested in learning about Canadian multifamily, as it's a space that I frankly know very little about at this point, and I'm very interested to hear how the market is up there. And then lastly, he also has been able to educate many other investors throughout Canada through the Mogul Mastermind. So welcome to the show, James.
Hey, thank you so much for having me. It's a real pleasure to be able to chat to your audience and talk about my favorite thing in the world, which is investing in real estate.
Love to hear it. So tell us a little bit about how you got your start and what you're focused on today.
Yeah, that's a really great question. When I was young, just finishing university, I was chatting with my dad and we were just brainstorming, next moves in life. And he said, hey, you know what? You've got a bunch of roommates. You guys are having a good time. Yeah, we sure are. And he said, are you planning on sticking around Edmonton for a while, where I was born and raised? And I said, yeah. And he said, well, why don't you just buy a house and rent the rooms to your buddies and just keep doing what you're doing? Like that's a pretty good move, and then you'll get some property to your name. Might be a good way to start out. So sure enough, I bought that first house. Basically had my own private frat house there for a little bit. We had a total blast. All the rent I was collecting was covering my living expenses off, which was really nice. And it worked so well, I bought another house on the same street, and we just had a group of friends all living close to each other and having a great time. And then one thing led to another. I bought another income property and then got my real estate license because I love the industry so much. I wanted to be more of a part of it. And here we are 15 years later. I've built quite a nice portfolio for myself, and the realtor career is going really, really well. I've got a bunch of realtors on my team now. And, our team has grown from our original market of Edmonton, Alberta, Canada to all of Western Canada that we service. We've got a headquarters for Alberta in Edmonton, my hometown. And then our British Columbia headquarters is in Vancouver, where I currently reside now.
Well, great stuff. Definitely. It's very interesting to hear that you got started off when you were in college. What year of college was that?
When I was graduating.
When you were graduating. Okay.
Yeah. I graduated, and then, commencement was in April, June-ish, I don't know, sometime in the summer. And yeah, I kind of got this idea in my head to pick up a property in the summer, and by fall, the boys and me were all moved in.
Love it. And it probably helped that you were living on premise, right? So you keep eyes on everything.
Yeah, you know what? I didn't know anything about real estate investing. So I definitely needed to learn by being immersed in the environment. So being there, being a part of it, and just getting to learn about, like how a furnace works, how to change a furnace filter, how to manage people, how to, be a bit of a hard ass and collect rent on time. Like it was a really safe environment to learn that in. And, it really helped me build a lot of skills in an environment where it was like, me and the friends. So there was no hard feelings. But it really taught me a lot about what I needed to know as far as being a landlord, and helped me get my start.
Great stuff. Yeah, I think that when people go off to school, that's usually the first real exposure to living. For a lot of people, that's the first exposure to actually being a tenant, right? Some people, while they're going to high school, might live in rentals, but they're usually not
paying as much attention to them because they're not oftentimes paying the bills directly, right? So I think when people go off to college, they're now for the first time, responsible, and most people naturally are not buying a house in the college market. They're going there, they're renting, and I think that's really everyone's first, big exposure to what the rental market and the rental world looks like. And I know I've seen that in several cases. A lot of successful investors got started just working for student rental companies, and like in your case, right, just being able to buy a house while you're graduating, and renting to your buddies, and soon enough that one thing leads to the next, and you start to see it as a real scalable business. So taking that first property and then going on to the second one, did you just keep growing in the college market, or did you start to look around and find outside opportunities?
I started branching out. I started educating myself more and more on different real estate investing fundamentals, talking to as many people as I could possibly talk to, just learning how things work. And one of the things that I got a really good handle of is that a really nice investment strategy is buying in markets where there's gentrification, there's improvement in the neighborhood, there's infrastructure improvements. So I started to get to know my city, Edmonton, a heck of a lot better, and specifically started investing in locations that, while maybe weren't the best locations right now, I knew that the city had big plans for gentrifying those areas. So when I was young, I bought a bunch of houses in neighborhoods that would have been considered fairly sketchy. And here I am 15 years later, and they're the cool, artsy, hipster hotspot in town, because sure enough, what the city laid foundations for back then is coming to fruition now.
Yeah. Well, I think that's a great strategy, and it's also one that can be very difficult to execute starting off, especially in the event that you have investor capital behind you, right? Because it's you have to really encourage everyone to take the long view and have a long-term outlook. I'm a long-term guy. Every property I buy, I'd like the idea of holding on to forever, right? For the most part. And obviously there are exceptions, and there are times where it's better off to sell. But I think when you work with a lot of investors, oftentimes a lot of folks in the day-to-day sort of syndication space have this 3 to 5 year timeline in mind. So tell us about who were some of maybe at what point you started to bring on outside investor capital. Who were some of those early investors, and how did you convince them to get on board with some of your earlier projects?
Yeah, that's a fantastic question. I bought the first property with my own money. I had jobs in university. I also did a nice job of getting scholarships, and because I was living at home, I didn't spend it all. So back then houses in Edmonton were not super expensive, and 5% down on a down payment for an owner-occupied property was totally within my budget. So made that work. But when I started buying income properties, I really did get into raising capital. I learned about that at a couple of different real estate conferences. I didn't actually know what raising capital was, or even that was a thing that you could do, until I went to real estate conferences and read real estate books. So when I got started, I was in my early 20s. I looked like a kid. I didn't think anybody was going to take me seriously. So I put together a real estate pitch deck and brought it to any single person who would even pay attention to me. So like a lot of my parents' friends, like my dentist, my doctor, a lot of adults that I was meeting at these real estate conferences. I basically just tell people, hey, I'm just learning this real estate thing. I'd love to get some feedback on my business presentation. I don't actually expect you to just invest with a kid like me, but I value your opinion, and if you can give me some feedback, I'd appreciate it. And I probably presented to easily, on the low end, 50, but probably closer to 75, maybe 100 people. And I went in with that open mind of, here's what I'm doing, can I have your feedback? And every iteration, that presentation got tighter and tighter. The visuals, the spreadsheets, everything just improved every single time. And before I knew it, people were saying, wait, is this something you're actually going to do? I was like, yeah, that's why I'm getting your feedback. I intend to start this business model. And they said, well, I'd invest in something like this. And sure enough, I started earning the opportunity to take on partners. So the first partner I actually met at a real estate conference. The second partner, she referred me to her kids. Third partner was my dentist. And then fourth partner were some of my parents' friends. And it just kind of snowballed from there. And, by by the third, fourth year I was doing it, people who gave me their feedback, 4 years ago, checked back in when I crossed paths with them. And I was like, yeah, I have like 15 houses now and they're all doing really well. And they were like, that actually worked. Yeah, we should talk. Okay. And, investors in projects I did 10 years in were people I had talked to right at the very beginning, who just kind of sat on the sidelines, watched, observed, saw if I was going to screw this up, realized I wasn't screwing it up, and then wanted to get involved. So, that's something that's really stuck with me my entire career. Is it's it's a long game in real estate, and somebody you talk to today may be your investor tomorrow, because investing in real estate is expensive. Nowadays you're probably going to need to raise at least 50, but more likely $100,000 for a starter project. A lot of people don't have 100 grand kicking around at a whim, but they might have, they might exit another investment or have saved up a little bit or be able to refinance a primary residence. 3 years from now, maybe they do have 100 grand, and it wasn't for lack of wanting to participate. It was for a lack of capital. And it's easy to forget about those people if they say, I'm not ready, or I can't right now, or I'm not interested now. To remember to keep in touch, because they probably will be ready later.
Yeah, I think that's phenomenal advice. The little guy always is growing up, right? I know for me, in my case, when I started to really get seriously into this business and raising capital, right, a lot of my peers were in their early 20s, right? So at that point, everyone's getting their first job. They got mountains of student debt. No one's going to be in a position to start stroking $50,000-$100,000 checks, right? So I think that having a long view there, though, and knowing that, again, everyone's going to be growing up, and people are going to be in a position where they have to start planning for retirement. They might get hurt by the stock market and start looking at alternatives. Who knows, what's going to lead them there? But they might be looking for tax advantages, right? But eventually, right, people will come around, and I've definitely seen that play out in my own life firsthand. And second off, I really want to stress exactly how you approached early investors. I think that is a gold nugget for anyone listening that's considering, maybe you're early on in your journey and you're looking at starting to raise outside capital, that the way that you approach them of saying, hey, can I get your feedback, right? I'm looking at something, I'm looking at an investment, I wanted to get your feedback, something along those lines. I think that those words themselves do a whole lot, right? Psychologically, it sort of puts a feather in their cap, and it's a sign of respect, right? Because it means I value your feedback, right? So it's very non-threatening. In fact, it's more of anything, it's almost like stroking their ego by, showing like, hey, I want to get your feedback because you're someone's feedback and opinion I respect, right? And I think most people are generally going to be very open to that, assuming that they have the time to invest to listen to you. And at that point, it kind of takes their guard down, so they're actually receptive and paying attention to what you're delivering. They're not just sitting there thinking they're getting a big sales pitch. And then at that point, now the message has been received, and it's up to them to do what they choose to with it, right? If they want to inquire further, then great. If they don't, then maybe you add them to your email list and say, hey, I'd love to get your feedback on my my newsletter every so often, and love to get your feedback on future deals I do. Would you like to be added to my investor list, right? To see my newsletters, right? Something along those lines. And I think that instantly, one, it takes down the guard and sort of is a nice way to approach someone that, again, might be a little bit more standoffish to it being coming off like a sales pitch, or, who might not trust you and see you as the experienced real estate investor yet. And then two, it probably gets a lot of early stage investors out of their own way, because I think a lot of people just have cold feet when it comes to actually picking up the phone to talk to investors in the beginning, right? Because you feel like you might have the imposter syndrome and say, well, I haven't done much yet, so who am I to go talk to them? Or you might have fear of rejection. So I think it's just invaluable, feedback, and it's a gold nugget that everyone can learn from.
Yeah, I really appreciate that you saw under the hood of that strategy. If I say, hey, can I pitch you on something that I'm trying to sell you?
Mm-hmm.
I'm busy. Hey, I value your opinion, and can I get your feedback? Well, people love having their opinion valued, and they love to. Now that I'm a little bit older, when young people come to me to ask for my opinion on things or my advice, it puts a feather in my cap, and I feel good about paying that knowledge forward. So I kind of figured if I took that approach, I'd get really, really good traction. And sure enough, I did. I mean, not a single person said, "Nah, I don't have time to help you out, kid." It really, really worked. It really, really worked.
That's phenomenal. So you went off, you started buying multiple income properties over the next coming years. At what point did you start the brokerage? And then at what point did you start to scale into larger multis? Or I think you have 300 or so doors now. I'm not sure the exact number, but maybe tell us about, where you are and sort of what that portfolio has transformed into over time.
Yeah, I became a realtor my second year doing real estate stuff. So got my real estate license in 2007, and I was a solo agent for a few years. Then I hired an assistant. I started hiring my first round of buyers agents in about 2012, 13, and then in 2017, that's when I made the decision to go from it all being all about me as a solo agent support team to it being all about a team that I was building and supporting. And so that was a big switch in mindset where instead of making it about my success and finding people to help me sell as many houses as possible, I flipped the script into how can I build a business that's bigger than me? And the whole point of that business is to help other realtors be more successful. So that was 2017. And now here we are in 2022. We're in multiple cities, and there are tons of agents on the team who are producing at a level I produced at back in the day, and it's super exciting to support them and to help them grow. And I really enjoy the leadership role. It opens up time in my day to do things like this, have really cool conversations with smart people about real estate, as opposed to working on client files. So I really enjoy that a lot. And I made it my goal that I wanted to step into the multifamily realm from single family properties. I didn't know exactly when I wanted to do that, but I knew it was something I wanted to get into. And sure enough, in 2012, I connected with another individual who was very keen on starting to build a multifamily portfolio. We partnered up and started buying properties together. I already had this large list of potential investors who I had, assembled over an 8 to 10 year period, who maybe they bought houses with me, maybe they said, call me if you have another opportunity. So there was a lot of capital kind of quote unquote sitting there just because I was having so many real estate conversations with so many people. I kind of had a nice list of people that may be interested for the right opportunity. And sure enough, a building came up. We put it under contract. We polished up our pitch deck and got to work and raised that first property only needed 250,000. And we did that. We did 5 partners at 50,000, which by today's term seems ridiculous, but back then $50,000 was a good chunk of change. And moving forward to today, our most recent project last year, we had 4 partners at $250,000 each. And yeah, I mean, working with partners is fantastic. For the last 5 years, I've always put in my own capital just to have the old skin in the game, as they say. I find that's a very powerful closing tool, is just showing them that you're putting in cash as well. But I've done so many deals where I've been strict working partner, none of my own money in, all investor capital in. There's no right way to do it, but yeah, raising capital has been a huge backbone to my success, and partnering with people and creating great projects has been a lot of fun. I really enjoy that part of it.
Oh, that's great. I want to first hit on your transition from it being all about you and being sort of the solopreneur, right, with the support staff, to shifting to focusing on the team and growing up. I like to call it a platform that could outgrow you largely. What do you think was the big shift there? What was the inspiration there? And did you have to backpedal a bit to be able to then move forward? Was it 2 steps backwards to start with?
That's a really intelligent question, because the answer is yes. And a lot of people don't realize that growth is expensive. I'll use another analogy. If you're looking at growing your body, if you're doing the bodybuilding thing, growth is expensive. You have to spend a lot of time in the gym. You have to spend a lot of money on high protein food, and you have to eat a lot of food. Maintaining your body, pretty easy. A lot less work to do that. Business is no different. I had to actively choose to do less real estate transactions so I could reinvest that time into building business infrastructure to create a platform, as you said, to grow that team. So for the first 3 years I was growing this business, my personal James income took a huge step back. But I knew that owning a business gets you into the old cash flow quadrant, as they say, whereas me being an agent doing my own transactions kept me in the employee quadrant. Yeah, I work for myself, but I don't write a deal, I don't create income. Whereas now I've got this team of individuals, a very robust business with people who are actively working with my support to generate income for themselves, but also revenue for the corporation, which turns into me. And part of the reason I wanted to do that was, number one, a new challenge. Managing a large client list was something I was very good at. Managing staff and people and building systems was something I hadn't really done. So there was a lot of learning there, a lot of growth, and just my personal value system and programming. I was ready for a new challenge. Part of it was being a realtor is, number one, incredibly rewarding. Any realtor out there listening to this, anybody thinking about getting into the real estate career, it's for the amount of education you need, which is next to nothing to get your real estate license. The income ceiling is way up there. By the time I was 25, I was making as much money as surgeons, partner lawyers, partner accountants, architects, like real professional designations that my friends who were in university paying to get. I was already out earning their income out of school working. That's huge. But that reward comes with a very tough gig. One of the toughest parts about being a realtor at a high performing level is you are 100% always on call. When a client wants to see a property, you go see the property. When a client wants to write an offer, you write the offer. When it's time to negotiate, you negotiate. When conditions need to get waived, you need to waive them. And so for anybody that follows realtors on social media, there's this celebration of the hustle, the laptop next to the pool on vacation, the phone on the golf course, the person texting at a fancy dinner. I leaned into that. I was celebrating the hustle. I needed to make that part of my personal brand and narrative, because an available realtor, a busy realtor, is a realtor that's doing deals. But after 10 years of never having a 100% unplugged vacation because I was doing deals on vacation, after dozens and dozens of Friday nights spent negotiating contracts, after dozens, if not hundreds of Sundays spent taking people out for showings, et cetera, I thought, I'm ready to transition my life into a structure for my lifestyle that gives me more ownership and control over my time, in more office related hours, because I really just wanted my evenings and weekends back. And so I thought, I'm willing to take A, short-term step in income back, and B, get myself out of the adrenaline and excitement out of transactional business, to build a platform, build a business where my expertise comes into supporting people in leadership. And the reason I shifted that mindset is because I interviewed a lot of very successful brokers, team leaders, and the common theme amongst all of the teams that were performing at the highest level is that the team leader, their primary focus was not clientele, transactions, doing deals. Their primary focus was business infrastructure, systems, supporting the people, working on the business.
Strategy. Yep.
Precisely. And, when you say transition, that's the right word. It wasn't like one day I was like, I'm going to do 0 deals and focus 100% on the business. I would have gone broke. So over a 3-year period, it was this general and slow and progressive tipping of the scales where every year I did a few less transactions. Every year I had more and more time for leadership. And it's this exponential curve where it was like slow, 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 slow. And then all of a sudden, bam, I'm doing barely any transactions, and realtors are joining the team left, right, and center. Our revenue is climbing quickly. And oh my gosh, when you invest in the business grows. But, at the beginning, I was like, okay, well, if I don't do deals, all these, newer agents aren't doing deals either. The team's going to crumble. So there's like this give and take in that transitionary.
Yeah, and you're feeding them deals. I'm sure giving up a lot of your commission to support new people, and it's a big commitment, and it's a early short-term sacrifice for a great long-term
100%.
gain and cause, I think.
And I'll tell you, that is the next evolution of the first phase of being a realtor, where you get so busy you need to hire an assistant, and you pucker up a little and say, oh, I'm paying this person $4,000 a month, $5,000. I don't know, whatever market you listeners are in. Mm-hmm. Assistants cost different amounts in different markets, but nowadays a good assistant is $4,000 to $5,000 in most markets. Gosh, what if I don't do any deals that month? I still have to pay that person their salary. That's that 2 steps backwards. You're investing in the platform that's going to help you grow. Because my biggest months ever as a solo agent were maybe 4 or 5 deals. I hired an assistant. My smallest month were 4 or 5 deals because I had someone to help me with all the paperwork, all the communication, all the organizing, etc., all the back end stuff, which freed up more time for me to develop client relationships and close more business. So, oh gosh, that little step forward of investing in growth, well, we're talking 10 times the commitment of investing in that business, of taking my time out of transactions and hiring more staff and. It's the same mental hurdle to get over, where if you want to get bigger, you have to change your focus away from working in the business and being the driver of revenue and investing in things that cause growth. So, to take it one step back from that, anybody that's thinking about being a realtor, you're probably going to transition from a cushy salary job into a 100% commission job. So a lot of people fail because they have no financial plan to transition into their career. They have life expenses, and all of a sudden you end up 30, 50, 70 grand in debt because you didn't do a deal. And oh my gosh, I have all this debt, I'm not doing transactions. Then you're anxious, then you're stressed, then you're not sleeping, then you're not doing self-care, then you're not taking care. You're edgy and anxious and forcing deals with the clients, and everything just, it's a bad scene. So again, you want to grow, you want to transition, you have to be okay with the investment, 2 steps back for the movement forward. So anybody that's thinking about being a realtor, treat it like getting a dental degree or a medical degree. Dentists and doctors take on $250,000 student loans to get that education. And then guess what? When they start pulling teeth and doing doctor stuff, they pay it back. So if you want to start a career as a realtor in a sustainable way that will help you launch in a way that keeps your mindset right, take out a line of credit for 50, 100 grand, and know that you will invest in your business before it starts paying you a return.
Yeah, there's so much good stuff in what you just hit on there. And I think the first thing I wanted to mention is just, I think, opening up and sharing your initial why for making that jump into being more of the business owner. I think I think a lot of people, they become so hooked on the adrenaline and the hustle, right? Or maybe, I think it's not even that I think partially they become hooked on it, but I think a lot of the times they become attached to the image of it, right? And it's hard to separate themselves because their self-image after 10 years gets formed around being that guy that's always on his phone, right? But being able to step out of that and have the self-awareness that I'm going to be able to control my time, and over time build more wealth while still controlling my time, I think is a huge, it's a leap of faith in the beginning, right? It's first having the vision and the foresight to say, hey, we can do this, and then committing to the actions that it takes to get there. I resonate with that very much as I'm going from even in the investment business, from being the one doing most things, right, in terms of being like the sweat equity behind acquisitions, investor relations, asset management, right? You name it, to now beginning to effectively delegate and build the right team, and pour into the team as needed. So I definitely resonate very much with that. And I think, but at the same time, you have to pay your dues, right? And I think to be a really effective leader, you need to spend that time paying your dues, being in the trenches, and that's what gives you the ability to really effectively scale the team as you see fit. So I wanted to shift gears, as I'm sure a lot of our audience is interested in learning your view on the Canadian real estate market as a whole. Where is the opportunity? Maybe we can speak towards multifamily, as it's probably the area we're most familiar with. Where are cap rates at? Where is lending? What do you see as the real opportunity? And for someone like myself that's not quite as familiar, that is mostly used to the U.S. markets, what are some of the major differences and things I should know about in order to effectively navigate the landscape?
First thing I would say to answer that question is know that Canada's a massive country. I mean, we're geographically as large or larger than the States. So to say the Canadian real estate market doesn't really do it justice, because from coast to coast, Vancouver is an incredibly different market than Edmonton on the prairies, is an incredibly different market than Toronto out on the East Coast, is an incredibly different market than Halifax on the
and I
on the
almost
Eastern
felt naive
Seaboard.
asking that question, but
It's
I
a
need
great
to start
question.
broad.
Totally. So I'm basically gonna cut the country in half and talk Western Canada because
Sure.
that's my wheelhouse. And there's
Perfect.
two major regions in Western Canada. There's the Prairies, province of Alberta, the two main cities, Edmonton and Calgary. Edmonton is where our headquarters is, and that market is an awesome market for cash flow. The affordability index in Edmonton is one of the lowest in North America. So what that means is the smallest amount of household income needs to go to the cost of living in an average property. What that means is the property values for purchase are very small compared to rents that are very high. So that means the cap rates are quite high. I mean, you can pick up multifamily inventory. It's a little bit older, BC class in the 6.5 cap range. And if you want to pick up something that's sparkly and new, you're still getting a nice 4 cap in a good location, maybe 3.5 in an A++ location. So it's a great place to invest because we're talking to get a little more number oriented, 120 a door in Edmonton. It's great, and the rents are great. $1,000, $1,100 a month for those doors. So really good numbers. And the inflation that hit North America after kind of the COVID dust settled a little bit, that inflation is kind of working its way from the perimeter of Canada to the center. So Vancouver and Toronto and area had massive inflation last year, like in some places as much as 30% growth. Edmonton had like 3 to 5% growth last year. And now there's this wave of capital rushing into the center of Canada, especially in the prairies, because the differential of pricing, between Vancouver and Edmonton was like this. Well, the differential just spiked. And so now, like, Vancouver ain't coming down. So
right.
Edmonton's now catching up. And we're seeing this flood of investor capital coming in from all over the country because relative to those major centers, it feels like Alberta's on sale. So we're super busy helping investors pick up kind of at the start of this appreciation rush. Buy something now, and by this time next year, it's going to be probably valued easily 10% more. And multifamily is no different. We're seeing a huge rush into the multifamily in Edmonton and Alberta. Alberta is kind of like the Texas of Canada. Little more laissez-faire, lower taxes, looser landlord-tenant laws. So it's a lot easier to do, like, buy a building, clear all the tenants out, renovate it, upgrade it, reposition it, and do that whole like reposition equity pull-up thing. So that's kind of the Edmonton market. Vancouver is, it's barely a Canadian city anymore. It's more like an international city. You put Vancouver on the map in terms of values and international capital and investment and prices. It's comparable with LA, New York, Singapore, Tokyo, Paris, London. Like, Vancouver's playing in that game. So is Toronto. So when you invest in that city, it's not as much about the cash flow as it is about the growth. So there's two major ways to take advantage of the growth in Vancouver. Either number one, buy something and rent it out and be okay with the fact that it's losing money every month, because even if you're losing $1,000 a month in 1 year, that's $12,000. It's going to go up by 150 grand in that 1 year. So you're investing in a short-term loss to access massive capital gain. And the second way to access that in Vancouver is pre-sale purchasing. Apartment buildings sprout up in that city nonstop, low rise, high rise. And so you basically put a deposit down on a unit 3 or 4 years before it's built. By the time it's finished construction, again, the value of that city grows so aggressively that by the time that unit is done construction, you'll have made 50, 100, 150 grand. So you put a $50,000 to $100,000 deposit down to hold a property. When the building is done, you take completion of the unit, turn it right around and sell it. And you can have massive ROI in that. Obviously very speculative, but Vancouver's got a 25-year track record of the market growing and that being a successful investment strategy. So, the prices in Vancouver are just so strong, so stable. And again, it's not a Canadian city, it's an international city. And with kind of the immigration stall that happened because of COVID, there's this massive backlog of people that want to come to Canada, and they land in Vancouver or Toronto first for the most part. So we're going to see this international rush of new Canadians driving the demand in Vancouver, which is just going to keep throttling the price forward. So, if you want to invest in Vancouver, it's a big money game. The average house price in Vancouver is like $1.5 million. Canadian, so Americans, that's like 1.1, 1.2, but it's not cheap. That's like, when I say average house, I mean like a sleepy little 1,000 square foot bungalow in a normal neighborhood. We're not talking a mansion for $1.5 million. We're talking a normal house on a normal street. But you buy that house for $1.5 million today, within a couple of years, it'll be 1.6, 1.7, 1.8. So if you're a big capital investor, and this applies to international investors all over the world, high net worth investors, even medium net worth investors, just buy it, put budget aside to feed the cash flow loss. Like I said, $1,000 a month for 5 years, 60 months, 60 grand. You pay 60 grand in negative cash flow to unlock a $500,000 equity gain. That is not an unreasonable strategy, according to a lot of our clients.
Wow. That's fascinating. I definitely really appreciate you sharing that. And I think it's just a good reminder that you can make money in any market. You just need to know how to play it, right? I think a lot of people get fixated on just cash flow being everything about the investment. But again, you're talking about some substantial equity multiples without receiving a penny of cash flow along the way, right? And I think it's just knowing how to play the market.
Every market's got a strategy that will allow you to do very, very well in it. So, with those two markets in Canada, it gives a lot of variety for two urban centers that are barely 1,000 miles apart. If you're a cash flow investor, Edmonton is the place to be. Our cash flow multiple is the highest in the country. If you're an equity investor, Vancouver is the place to place your capital.
There you have it, plain and simple. Love it. Well, James, where can listeners find you online if they'd like to connect, and what's the best way to become a part of the mastermind that you lead?
Absolutely. Yeah. If you want to tune into our monthly mastermind, we talk about all things investing, all things Canadian real estate. Go to www.mogulrg.com. That's our website. I'm easy to get a hold of. I'm a big communicator. James@mogulrg.com is my email address. If you're interested in learning more about Canadian real estate, especially in the Western region, drop me a line. And if you're thinking about a career in real estate, or you're a realtor that wants to be a part of an investor-oriented network of realtors, drop me a line. That's what we do.
Fantastic. Well, thanks so much for jumping on the show here, James. It's been a pleasure.
Yeah, I appreciate you. Thanks for having me.
Thanks for tuning in and joining us on another episode of Operators and Allocators, hosted by the Requity Group, a vertically integrated private equity real estate company. You can find recordings of all shows along with other resources on our company website, therequitygroup.com, also listed in the show notes. A brief disclaimer to our listeners. Information presented herein is for discussion and illustrative purposes only and is not a recommendation or an offer or solicitation to buy or sell any securities. All investments are subject to risk, and past performance is no guarantee of future results. The views and opinions expressed by the Requity Group speaker are their own as of the date of the recording. Any such views are subject to change at any time based upon market or other conditions. We hope to see you next week.